So my name is Ian Harding, and I'm the co-managing partner of Arcus Infrastructure Partners, which is a private markets investor in European mid-market infrastructure. We currently manage around 5 billion euros of capital across 8 businesses in Europe, and we formed Arcus in 2009, and over the past decade have worked hard to invest, manage and divest infrastructure businesses in the telecom, transport and energy sectors on behalf of institutional investors. So in terms of the differences between the GFC and the COVID-19 pandemic, I think the first thing to say is that these so-called once-in-a-generation crises are becoming frustratingly more regular. And therefore, whether you call them black swan or grey rhino events or other such colourful wildlife, I think you do need to think about and consider them seriously when making investment decisions. So perhaps taking each of the crises in turn. Firstly, the GFC. This was an economic crisis caused by, obviously, a breakdown in the global financial system, whereas COVID, by contrast, is a health crisis, which has unavoidably had a knock-on impact on economic activity as a result of government action, primarily aimed at preserving and protecting life. As such, I think that the two events have very different causes and therefore are quite different economically. So perhaps taking the ongoing COVID crisis, I think the financial system has remained pretty resilient. Banks and other institutional lenders have continued to lend money to all types of infrastructure businesses. In fact, I think one of the first things that companies in the transport sector, and they're the most affected by the lack of mobility, first thing they did was really raise liquidity and draw on bank lines to keep them solvent. And frankly, this just wasn't an option during the GFC. The GFC's economic downturn was much more drawn out, much more sort of gradual decline, as companies obviously scrambled to stay solvent without the support of the financial sector. I think during COVID, again, some sectors have ceased trading, but banks and institutional liquidity or government support has basically prevented insolvency. And by contrast, that's also prevented, I guess, fire sales of assets or businesses, which to some extent we saw during the GFC. So in terms of similarities between the GFC and the COVID pandemic, I do think there are more differences than similarities personally, but if you look at sort of macro impacts, I'd say there are 5 that are probably similar. The first is GDP. Obviously GDP has declined, I think at different rates. You know, GFC was much more gradual. COVID has been a bit of a cliff edge, and that's really had different impacts on individual assets and also recovery paths for those assets. I think both crises clearly had low inflation. So again, if you're thinking about inflation correlation in infrastructure, both are really quite low inflationary environments. Both have huge amounts of quantitative easing. So again, low interest rate environments, probably attracting more capital to this space, given the returns you can earn from infrastructure compared to fixed income. I think there's probably a trend that hasn't yet evolved, but in my view will evolve, which is higher levels of unemployment. Obviously, the GFC had a more severe impact initially on unemployment. I think COVID has been helped by a lot of the government support, but ultimately I think unemployment will start to creep up as we continue through the crisis. I think lastly, the fifth one, equity markets and the volatility around the equity markets and some of the dislocation. Obviously, equity markets have reacted quite dramatically in certain areas to COVID, and clearly there are opportunities that have come out of that, which again investors like ourselves could take advantage of. So in terms of the impact on the infrastructure market, again looking a little bit more forensically, I think anything that requires people, patronage or mobility to earn revenues or EBITDA, like airports, like the cruise industry, roads, ferries, motorway service areas, even trains to some extent, so transport assets predominantly, they've been heavily impacted clearly. Other sectors like communication infrastructure, so fiber or towers or data centers, or even regulated businesses or contracted infrastructure like water companies or gas and electricity grids or renewables, I think have been largely unimpacted. In fact, in the case of communication infrastructure, you could argue that they've had a positive impact as a result of COVID. I think this has been quite clearly seen in public markets, so equities, but also reads across the private markets, although I think the transparency and perhaps the speed of adjustment has been less visible there. I think because the fundamentals behind the economic downturns are very different between the GFC and COVID, the reaction from GPs like Arcus and also portfolio company management has also been quite different. I think we've experienced deal activity and pipelines haven't been particularly enhanced by distressed asset sales. And if anything, for example, in transport, there's been very few assets that have been marketed over this period compared to what happened in COVID, or pre-COVID or during the GFC. I don't think that the quantity of deal flow has necessarily changed, or at least that's what we've seen in the mid-market space. Certainly diligence timetables have extended, and by that I mean the timing needed to properly assess the risks in the businesses that are being acquired. But I think that's quite easily explained as a consequence of border controls and also social distancing, which has obviously limited the ability to visit sites and assets, and also made it more difficult to physically meet management teams. In terms of geographies, certainly in the first half of the year, January through May, we were seeing more opportunities in the Benelux regions than we're seeing now, but there hasn't been an obvious decline geographically. In fact, our deal pipeline has remained pretty resilient over the last 6 months. I think the UK, as an investable market where I'm obviously based, has perhaps surprised many. It's been pretty resilient despite COVID and also Brexit to layer on top of that. And has actually had quite a strong year to date across all classes of infrastructure. I think the last comment I'd probably make is around pricing, in that I think given the capital that's been raised by infrastructure funds and also other direct investors, I mean, that's been very heavily targeted towards sectors that are benefiting from the COVID impacts. So I guess communication infrastructure or energy infrastructure supporting the transition to net zero. And I think we're seeing perhaps a lack of supply in these assets and the pent-up demand creating price inflation in these assets, and almost a sort of valuation bubble forming, certainly in some of the recent transactions we've seen in these subsectors. So the role of asset management and whether it's been changed or altered following the GFC and now into the COVID crisis, I think it has evolved in the sense that over the last 6 months, through necessity, there's been a lot less traveling on planes and through airports, so I haven't missed that, and fewer physical visits to the asset locations. I think it's the relationships and trust that you've built up over the years with the management teams that have become even more important than before, given the enforced remote asset management that people are having to do at the moment. Saying that, I think the asset management techniques have broadly remained consistent. Certainly they have at Arcus, and whether you're looking at operational performance initiatives or strategic initiatives or financial initiatives, these can all still be advanced through the remote interface. So in terms of how to generate value in the current market environment, I think put simply, there are 3 aspects to value creation. I think it's buying well, it's managing well, and then it's exiting well. I think if acquisition prices continue to rise, certainly in some of the sectors I mentioned before, then it puts pressure on the asset management because exit multiple expansions become less likely driver of returns. I think having been through several crises, whether that's GFC, whether it's European sovereign crisis, and now the pandemic, I think it's important to use both defensive and offensive plays, to use a phrase from American football, in your asset management, depending on whether you're looking to preserve value or create value. And I suppose what I mean by that is you bring on your defensive plays if you're looking to defend a position, and likewise you bring on sort of offensive plays if you're looking to consolidate or take advantage of good opportunities in the market caused by dislocation. So it's really picking the right tool to use at the right time. I mean, infrastructure businesses are essentially people businesses, and you've got to basically be mindful of all stakeholders, not just the shareholders, when managing this infrastructure. So I think it's important to work closely and constructively with your management teams and ensure that they are also incentivized and aligned with your objectives as a shareholder.